Let's get our webinar underway. So again, welcome to all of you who are joining us today. Leanne and I are sharing another webinar on this, what we feel is a very important series of webinars on how to grow your business successfully. Clearly, whatever business we're in, we want it to be successful. And we know growth is important, but often it's a matter of knowing exactly how. So hopefully today's webinar, which is going to talk about a key component, minimizing tax or saving tax, how that complements you growing your business successfully. So today's theme is all about customizing. So you're going to be able to look at your own individual situation, customizing your tax saving strategy. So what's involved? What savings are we talking about? What strategies are there? That's what our webinar today is going to be all about. So some helpful tips, some housekeeping. So because we have a number of you on our webinar today, if you can please post your questions on the Q&A panel in Zoom. That way, we have another member of our team, Sandra, who's going to be monitoring your questions. And as you know, we're going to have 3 question and answer sessions throughout our presentation. We want to make sure we are aware of your questions, and we have an opportunity, Leanne and I, to answer these questions live. So if you could please put your questions in the Q&A panel, that would be great. And if you have other comments that you'd like to share with us, if you can adjust your setting to all attendees and panelists, that will allow all of us to benefit from your insightful comments throughout our webinar. So please put those comments in the chat box. So those are some brief helpful tips. If you've been with us before on our webinars, you know who we are. Leanne Ballard is co-hosting with me today. She's a cloud accounting specialist, and I'm a CPA and founder of our public accounting firm here in Ontario. So what could we say about our practice and what we're all about? So if you haven't met me before, I'm a chartered professional accountant. And basically, I specialize in coaching business owners, helping business owners of various sizes in a variety of industries grow their business successfully. And accounting and tax and business advice, they all work together to help a business owner grow. So that's a little bit about our firm, where we've come from. And we have a real passion that's embodied in our firm's mission statement. We have a real passion. We hear time and again how hard all of you as small business owners are working. And so our passion at our firm is to help you grow successfully and profitably so that you have more time and money for yourselves and your families. We hear so many times from business owners how hard they're working, how long their days are. And so it's our goal to help you have more time and more money for yourself and your family. So that's what our firm is all about. Along with our team, we help business owners that way. And so if you haven't already, please download our complimentary ebook. We think it's going to help you fast track, get out of the starting gate as quickly as possible to grow your business at whatever stage it's in now. You'll find some key concepts, practical ways, how a business advisor can help you, how systems are important, how they help you grow. So please download our ebook and start growing your business successfully. And over to Leanne, would you like to tell us a little bit about you and your firm?
Absolutely. Thank you, David. Okay, so our firm, Cloud Business Services, is made up of a team of 3 women. So Tanya is our founder and leader. Myself, I'm the operations leader, and Sandra, who you will see on this call, is our accounting specialist. So we do as David kind of said with his firm, we value our customers and providing high quality customer service and fostering long-term relationships. So we are looking to work with our business, making sure that they have clean data, audit-proof books, and the guidance that they need from us. We also work with other industry professionals to help them move their own accounting firms or bookkeeping firms into the cloud and help them service their clients in the same way. So that's a little bit about us.
Thank you, Leanne. And Leanne's firm and our firm, we saw the value of creating a strategic partnership. So our firm creates strategic partnerships with other independent professional bookkeepers or other professionals in the accounting space so that the clients really benefit from a team approach. They are able to have one single point of contact, a close-knit team helping care for all the needs of business owners. So Leanne's team and our team is an example of strategic partnerships that we're reaching out to across the country, setting them up to help independent professional bookkeepers really create a difference in the marketplace. So why are we having this series of webinars about growing a business successfully? Because there are many questions a business owner has in their mind. Sometimes it's not a straight line from where a business owner is now to where they want to get to. And really, it's a journey, isn't it? All of you on this call who are small business owners likely didn't have an overnight success. Really, you put in hard work. You needed to make many thoughtful decisions. And sometimes the path is not very clear. And so what we have found working with business owners is that when we've seen success in a business, it's because business owners have thought of 3 things carefully. They thought of their destination. Where do they want to go with their business? What's their vision? What's their dream? What's the ultimate outcome? Secondly, having a map. Knowing the route, what are the steps? In what order should the steps be done? How quickly should the steps be followed? What's involved in each of these steps? So having a map is very helpful. And third, a guide, someone who's traveled that journey before. Leanne's firm and our firm, we're small business owners ourselves, and we've worked with many small business owners. And so we know the typical challenges and hurdles that often a small business owner faces. And so just like with a literal journey, where you need to know where you want to be, you need to know where you are now and have a path to get to where you want to be, it's helpful to have someone who's experienced, who's traveled that road before, helped others on that journey before. And so that's why Leanne and I decided to put this series of webinars together to help small business owners on this journey, to help them be successful. So this webinar is another one in this series that we hope you will find practical. So as we mentioned today, the agenda is all about customizing your personal tax saving strategy. So what do we mean about minimizing your overall taxes? What are some ways we can do that with a corporation? We'll talk about that first. And then we're going to talk about how do you take money out of the corporation? Should it be a salary? Should it be a dividend? Should it be part of both? How can you decide that? we're going to discuss some of the factors for you to consider. And then Leanne and I, we're going to talk about key tax deductions. What are some typical tax deductions? How can you maximize them? What's involved to ensure that the tax deduction will be accepted by CRA? So, and then of course, we're interested in answering your business questions live during the session. So if you have a current challenge, you have a question with this material, please ask it. And Leanne and I will do our best to do what we can to give you a valuable response. So let's get started. So our first topic, how can you minimize your overall taxes? And of course, we're talking about in a corporation context. If you missed our previous webinar, it was all about why a corporation should be set up in the first place. And one of the reasons that we shared in that webinar was the fact that there's a huge difference between the corporation tax rate and the personal tax rate in Canada. And so very often, having a corporation, you're able to defer tax. So what do we mean by that? What we mean by that is if you didn't have a corporation, you could pay up to 50 or more % of every dollar of your profit in taxes. But with a corporation, it could be 15% or less. So there could be a 40% difference of every dollar of profit you make, whether you're paying it in taxes or not. And you're able to save that by having a corporation. And so until you take that money out, you are paying taxes on the profits earned in the corporation at that very low rate year after year after year. So imagine having a corporation for 10, 20, 30 years and never taking money out. You would only be paying tax at that low small business rate until you do. And you get to decide when you take it out. So think of the years that can go by where you defer paying a higher amount of tax than the small tax rate that a corporation pays on its profits. So if you haven't watched that webinar, we invite you to do so. It will fill in more context about the many reasons to have a corporation. So that's the starting point, is you pay taxes in the corporation at the small business rate. The next step then is to decide how much of those profits will you actually take out in any given year. So unless you need the money for your lifestyle, we suggest you leave the money in the corporation. It's the lowest tax rate there is. And then decide for your lifestyle, what amount of money would you need to care for your and your family budget, monthly or yearly. And so unless you need the money to live on, according to the lifestyle choices you pick, we suggest you leave the money in the corporation. And that's how you minimize your overall taxes. Let's look at a third step. After you decide whether you're going to take a salary or a dividend or both out of the corporation, you then can decide when that money will come out. Every year, you're in control. You're the decision maker. You're the owner. You're the shareholder of the corporation. You get to decide whether you're going to take money out of the corporation that year or not. And will it be salary? Will it be dividends? And who in the corporation will receive this money? So there are many decisions and factors to think about. And to be able to do that effectively is why a trusted business advisor who's a tax specialist is key. So when it comes to taking money out of the corporation, perhaps you're a father and husband. So perhaps you're thinking of your wife receiving funds, maybe some of your adult children. If you're a single parent and you're running the business and you have adult children, are they helping you? There's all these different factors to think about as far as who should receive a salary, who should receive a dividend, how much should they receive, what is reasonable, what does the Income Tax Act allow? So you can see a trusted business advisor is key. So these are some of the key concepts when it comes to minimizing your overall taxes. And so now we invite any questions you might have on this basic framework of how to minimize your overall taxes.
Hi, David. So the first question that I have here is, when is the best time to take money out of the corporation?
Good question. So there's a few factors to think about as far as when to take the money out. And it depends on what are your objectives. So likely a small business owner will want to take out some money every year for their lifestyle needs. The question is, how much are those lifestyle needs? And as we're going to talk about in a few moments, if you take out a salary, perhaps you want to take it out on a monthly basis because you know what your basic monthly needs are going to be. So every month you can set up a payroll schedule if it's salary. And then you have source deductions that go with it every month. Or perhaps it's something that you do annually. If you do it annually, the numbers will be bigger, right? You won't be carving up your monthly amounts in 12 pieces. You'll be taking and recording salary in one lump sum, and then you're going to have a large source deduction amount to pay at that one time. So sometimes it's a cash flow that determines when the money comes out. With dividends, they can be taken out at any time. And if you know that you're going to be taking dividends out of your company, you know how much you're going to be taking for that calendar year, you basically can take the money out anytime when you need it and when the company can afford it to pay you. Hope that answers your question.
Okay. And the next question that we have here is, you named off some people that can take money out of the corporation, but out of those people, is there anyone in particular who can receive money to keep the taxes down?
So what we see really working well is when you have a husband and wife team in a typical family, and they're both working hard in the business. It makes sense for both the husband and the wife to receive a reasonable salary or dividends. You save a considerable tax. For example, if the wife was busy in the business and took out $100,000 and the husband took out nothing, there would be higher taxes to pay in that scenario compared to both the husband and wife each taking $50,000 out. It has to do with the progressive tax system that we have in Canada. The more you take out, the higher percentage you pay in tax as you go up. So where you can balance, equalize, split income, according to the Income Tax Act, what's reasonable, what's fair, what you can justify, the better. And so that's a typical situation we see. We also see situations where adult children are significantly involved in the business. Perhaps they're being groomed to take the business over one day. And so it's important to think about what would be a reasonable salary that could be given to an adult son or daughter who are coming into the business, learning about it for succession planning into the future. That's typically where we see income tax benefits in a family corporation. Of course, if there's unrelated members who are shareholders in a corporation, then there will be other factors to think about as well. But that's one example.
Perfect. Thank you. That's all the questions that we have for this section.
Okay, thank you, Sandra. So please keep your questions coming. That's one of the reasons why attending a live webinar is helpful, is that we can respond to challenges and questions that you currently have as business owners. So now let's talk about our second topic. In our first topic, we talked about that the way you would take money out of a corporation is either as a salary or as dividends. So clearly the logical question that comes up is, well, which one is right for me? Which one is right in my family circumstances and my business situation? So we're going to walk you through some factors to think about. And then, of course, we suggest a further discussion with a trusted business advisor who can thoughtfully help you walk through your options. So option one, as a shareholder, you could receive dividends from your corporation, right? As a shareholder, as we mentioned in our previous webinar, as a shareholder, you own shares in the company, in the corporation. And so every year, a corporation can pay out money, basically dividends of a certain amount on every share the shareholder owns. So one example is you could take 100% of the money out of the corporation that you need for your lifestyle as dividends. Why? Because you're a shareholder of your corporation. But there's another choice. As a shareholder, you also can be considered an employee. An owner-manager is often the term that's used. You are also an employee of your corporation. So you could receive all the money that you take out of the corporation in the form of salary. That's a second option that you have. A third is to take some of both. Some of your funds out of the corporation as salary, the balance as dividends. So how are you going to decide? So there's two important factors to think about. First, a trusted business advisor really needs to understand your situation. What family members are involved? What are your objectives? What are you hoping to achieve? How long are you planning to be in business? What are your lifestyle needs? There's so many factors to think about. So there's no quick answer. Similar to going to a doctor who will ask you many questions to understand the best diagnosis for you in a medical way, in a financial way, we feel as a trusted business advisor, there are questions to ask to better understand your situation so that helpful suggestions and advice can be given. So that takes a little bit of time to have that discussion. And then secondly, the Income Tax Act is thick and it's complicated. And so a trusted business advisor can help you navigate through many of the complicated rules and the CRA interpretations so that you're on side and that the decisions you make will be successful and be accepted by CRA. So those are the two main questions you need to ask yourself. What is your specific situation? And based on that, what would the Income Tax Act allow? So now let's talk about some of these specific situation considerations. And you can then suggest and analyze, do they apply to you? And so this will give you information to think about and to assist you when you have your conversation with a trusted business advisor. So first of all, when it comes to considering salary or dividends, depending on which you take, there can be immediate costs. As we mentioned before, with dividends, you simply take the money out. With salary, though, there are other things to consider. If you've been an employee in other businesses, you know that you're not paid the total amount of your gross pay. There are deductions. One of them is CPP, Canada Pension Plan. And so when you take out salary, you need to realize that there will be Canada Pension Plan withholdings on the amount you're taking out. And then also as the employer, you'll need to match those deductions. So there's a cost, isn't there, when you take out money as salary compared to dividends. Something else to think about, depending on how much you take out, there can be employer health tax. There can be Workmen's Safety and Insurance Board premiums, WSIB, that need to be paid. These are all things to think about when it comes to taking out salary as opposed to taking out dividends. So that's one area to think about, immediate costs. A second area is that there are certain personal tax deductions that only happen if you have earned income or salary. For example, perhaps you have children who benefit from daycare, and that could be several thousands of dollars each year per child. That child care deduction is very valuable when you have it on your personal tax return. Thousands of dollars of tax can be saved. But that child care deduction can only be deducted if you have salary. If you take all of the money from your corporation as dividends, that child care deduction is lost. So again, if you have children who benefit from daycare, you would want to think about having at least some salary so that you benefit from that child care deduction. That's just one example. There's moving expenses and other personal tax credits and deductions that only are triggered for your benefit if you receive a salary as earned income. A third area and factor to think about is, what is your financial planning philosophy? In other words, are you planning to benefit from the Canada Pension Plan for your retirement? If so, you're going to need to take out salary because your CPP premiums can only be paid into the plan if you're taking out salary. It doesn't apply if you're taking out dividends. Do you feel it's important to contribute to an RSP for your personal financial planning? If your answer is yes, then you will need to take salary out of the corporation so that you'll have contribution room to deduct and to contribute to your RSP. With dividends, there is no RSP option. But perhaps you feel that you want to be in control of all the investment decisions that are made. Perhaps you don't want to pay into the Canada Pension Plan. Well, you can save those premiums, both the employee and the employer portion. As you take the money out of the corporation, you then can make your personal financial decisions. Or you can leave all the money in the corporation that you don't need for your lifestyle and invest within the corporation and take out money in the future as dividends if and when you need those funds for your retirement. So as you can see, there's many factors to think about when you're thinking of your personal financial planning and how salary and dividends can play a role. With dividends, you have greater flexibility because you can pay them whenever you make that decision as a shareholder. Of course, with salary, it needs to be scheduled either monthly or yearly, and then source deductions need to be paid on time. So you can see personal organization is needed more if you're going to pay a salary. Involvement in the business. Often, the more a person is actively involved in the business, the greater consideration there is in taking out a salary. Often, if a person is not intimately involved in the day-to-day operations of the business, and there's more than one shareholder, sometimes the shareholder will receive a dividend rather than a salary. And as we said before, the Income Tax Act has criteria to meet to make sure that all the tax planning is on side from CRA's perspective. So you'd want to look at how involved are you as a shareholder in your business. And then there's some other factors to think about. As we mentioned before, when there's a salary, there's these regular monthly withholdings or yearly withholdings of income tax, CPP, that go into the government. It's a little bit like a forced tax planning program. So with salary, typically when you file your personal tax return, you'll be pretty close to the tax payable compared to the taxes that have been withheld throughout the year. But with dividends, as we mentioned, there are no withholdings. So as you take out monies from the corporation month after month as dividends, there is no mechanism for you to put aside money for those personal taxes throughout the year. And so you will need to have organizational ability to set aside in a scheduled way that money. Otherwise, when your personal tax return is filed and you have a large tax bill, you may be scrambling to find the funds to pay those taxes. So that's one of the challenges if you pay out dividends. Now, if you pay dividends, it may be that in future years, CRA will ask for you to pay tax installments quarterly throughout the next year, so that CRA doesn't need to wait until the end of the year to receive the taxes, but the Tax Act says CRA can ask for the funds quarterly throughout the year. So you'll need to make sure you make those scheduled quarterly tax payments. And the same with the corporation. If you take out dividends, there may need to be corporate tax installment payments throughout the year. So if you are disciplined and organized in making these payments, dividends may be an excellent option for you. If you like to have things done for you a little bit more with forced savings to set aside funds for your taxes, perhaps a salary would work better for you. So these are some of the factors to think about when deciding, will it be a salary, will it be dividends, or will it be some of both? So are there any questions on this part of our webinar? Making the right choices on how to take money out of your corporation.
Hi, David. We do have a question here. It says, when there are multiple shareholders, if one shareholder is paid a dividend, does every shareholder receive the same dividends?
So the cute answer is it depends. And let me explain what I mean by that. Every share, in a corporation, there is at least one class of shares. There can be more than one class of shares. The regulation is that every share on a class of shares has to receive and be entitled to the same amount of money per share. So if you only have one class of shares, let's say there are 4 shareholders in a corporation, and there's only one class of shares. If each of those shareholders own 25 shares each, that's 100 shares. That would mean that any dividends paid out of the corporation would have to be paid out 1/4 to each shareholder. And so the dividends would need to be the same. But what we see in corporations at times is there's more than one class of share. Perhaps shareholder A owns Class A shares, and shareholder B owns Class B shares. The corporation can pay out dividends on the Class A shares to shareholder A, and then the corporation can determine a different amount to pay on the Class B shares to shareholder B. So that's why I say it depends. Do you have more than one class of shares? Do all the shareholders own the same number of shares of each class of shares? And that helps you understand the answer.
Okay, thank you, David. Next question is, how do they know how much gross pay to take out?
Good question. So the trusted business advisor would respond with another question. How much do you need? How much do you need to have in your jeans after the source deductions are withheld, the CPP and the income tax? How much do you need to have left after those deductions? And when that amount is known, your tax advisor, your trusted business advisor can work back with the math to determine what the ideal gross amount is, so that when the deductions are taken off, you end up with the amount of money you need for your lifestyle.
Perfect. And last question here. For the owner, you talked about taking off CPP. Would they also have to pay into EI?
So generally not. Generally, a shareholder is exempted from having to pay EI. At times there is EI, but generally speaking, a shareholder would not need to pay EI.
Okay, thank you, David. That's it for the questions for this section.
Okay. Very good. So now we're going to consider some key tax deductions to consider. And we're going to turn the program over to my co-host, Leanne, who's going to share the 4 of these important tax deductions with you and answer any questions you have on this material. So Leanne.
All right. Thank you, David. Yes, so we're going to cover 4 key tax deductions, but just know there are numerous amounts, and to definitely seek the guidance of your advisor on what you can deduct within your business. So the first thing we're going to start with is business use of home and what you can deduct with a home business or a home office for your business. So there are numerous costs that can be deducted, such as your electricity, gas, home insurance, repairs and maintenance, mortgage interest, property taxes, rent if you're renting, home phone, internet, and water. And there's different criteria as to how much you can claim of each of those. One of the items that I do want to bring your attention to on that list is the repairs and maintenance. This is definitely one that, depending on what you are doing to improve the space, you need to consult with your business advisor on. There are different criteria of what you can and cannot claim for your home office business, depending on what the repair or maintenance is, how it affects the home office space, and other things to consider. When determining how much of each of these costs you can claim, there's 2 different ways that we can look at your space and determine what percentage of your home you can truly use on your business taxes. One way is to determine the square footage of space that you are utilizing for business. So you would take the total square footage of the home, the square footage of the space you are specifically using, and determine a percentage that way. The second way is by number of rooms, where you would determine the number of rooms in the home versus the room or rooms that you are using for business. That being said, there are many factors to consider when you're doing that calculation. It's really important that the amount of your home that you're using for business is either truly dedicated space or that you're taking into consideration that you're not using it for business 100% of the time. So this is where your business advisor can come in and help you make sure that you're calculating properly so that you can get full benefit and there won't be any questions when you submit that to the CRA. So the second portion is vehicle use for business. The costs that can be deducted under this are fuel, insurance, license and registration, repairs and maintenance, business parking, and 407 tools for business. There's a lot of information that you do need to provide and have on hand for your business advisor and tax preparer. So you do need to provide the year, make, and model of the vehicle. And you need to determine what percentage that vehicle was used for business in kilometers. So it's really important that you track your kilometers starting on the first day of the year and track where your kilometer setting is on the last day of the year and what your travel is in between. To make this easier on you, there are a number of apps on the market that track your trips in between, and you can then classify them as either business or personal use. This gives you really clear reports to use so that you have all of the documentation required by the CRA. If you do decide to keep a mileage log, say by hand or by Excel spreadsheet, just make sure you have all the important details such as date of the trip, where you started from, where you ended up, the number of kilometers traveled, and the reason for the trip. The CRA does look for that kind of detail. If there's anything else for you to consider, of course, your business advisor is going to help you lay all of that out. Other things that you want to make note of for your business advisor is if your vehicle is financed with a loan, when your payments start, and the purchase price and interest paid in a year, and if your vehicle is leased, total payments, as well as the manufacturer's list price so that you have that for your tax return. All right, so then we have meals and entertainment. This category is sometimes misinterpreted. So meals and entertainment are strictly meant to be used when you are taking a prospective client out in order to gain their business. So at this point, you have a business expense that is 50% deductible. In this case, your business advisor tax preparer is going to help you figure that out. What you need to do is keep track of those receipts and put the prospect's name on the receipt so that you have that to go back in your records if it's questioned as to whom you were taking out and what the business was that you were looking to provide for them. There are other meals that you can utilize, such as some staff meals and staff events are deductible 100% in the tax year, as well as you can consider there's other gifts and promotional costs that you will be able to utilize, but seek the guidance of your tax preparer to help with that. Finally, with capital assets or expenses, so there will be some expenses that you can expense within the year, but then there's larger expenses that would be expensed over a number of years. So in order to make the decision as to what that threshold is for your business, this is another area where, again, there can be variations, and your business advisor is going to look at your specific situation. But effectively, you want to keep track of those larger items so that you can have those discussions and make sure that you have everything in order for when you file those taxes. All right. Do we have any questions?
Okay, so we do have one, I guess, just follow-up question from last time. So David, I'll pass that off to you for now before I get over to Leanne. Would you advise a payroll and dividend, a split, i.e. 60,000? You're on mute,
Oh.
David, sorry.
So what I'm understanding from the question is there's 60,000 to be paid out? Is
So
that the question?
The clarification is 60,000 payroll and the rest dividend.
That's one approach. The question is often, how much do you need for your lifestyle? Because we often advocate only taking out what you need for your lifestyle. And so maybe it's not 60 a year, maybe less is needed. So it's often, that's one factor to think about, but often it's a collection of factors to look at. So that's why I say it's not a simple, straightforward, quick answer. It would be a matter of understanding all the factors in the shareholder or the business owner's situation. It may be that there will be salary to 60,000 and then dividends, but it may all be dividends. There's a lot of different factors that we've introduced that would need to be considered, but ultimately the shareholder, the business owner would decide at the end of the day what is best for them.
Okay, so David, just follow up to that. If they needed more than 60,000 and and they were thinking 60,000 for the max on CPP.
So if the decision the shareholder wanted to make is they wanted to maximize the Canada Pension Plan income that they would get when they retire, then the idea would be is to maximize the CPP pensionable earnings. And every year, that amount is subject to change. And the government publishes every year what that amount is. So it doesn't stay necessarily flat at a certain amount. That amount can go up every year at the government's discretion. So it's possible that the amount would be 60,000 and then the balance be dividends. That is an option. But what's important to consider is, does the shareholder feel that the Canada Pension Plan is one part of what they want to consider their personal retirement planning? Or do they want to take all those funds and do their own retirement planning for the future?
Okay, thank you, David. Okay, so the next question is, do meals and entertainment qualify if they are with clients that they've already gotten business from? The example used during a completion of an awarded project.
Leanne, would you like to start?
Actually, I was going to defer to you, David, because that's a very good question, because I would say if it was a matter to gain additional business, yes, but this is, I guess, a celebration after. So I would love to hear your opinion on that, David.
Yes, so the Income Tax Act starts by saying that whatever is deducted for tax purposes needs to be reasonable. So that's the starting point. So the first question to ask is it reasonable that a business owner would be in the company of a client? And is there the likely potential of creating business income revenue from being with that client? There is additional factors and details to think about, but it's important to think about the fact that when you're with your client, you are likely talking about, and often you're talking about, future business, or you're talking about business owners that your client knows that could benefit from your services. So it's important to remember that there's networking events also that you can have meals and entertainment deductions for. But it's important to take a look at the Income Tax Act. Again, as you say, look at the specific situation. And so it's important to know exactly what's happening at this event and what the business owner is hoping to achieve from being in the company of an existing client.
Okay. Next question. Can I use my front foyer as part of my office space for deduction if I use that as a waiting area for my clients?
All right. So when I talked about business use of home, I did allude to the fact that there are scenarios where portions of your home may not be used 100% for business. So for example, the front foyer, you would be looking at the consideration of how long are they actually spending in the front foyer? And then where is the primary business being done? It's a little bit of a gray area, but what I would say is if you now have to take into consideration not just the space being used, but the time it's being used, you may find that it's overcomplicating things. And as David pointed out, the first thing is it reasonable? And we want to regard it from that direction of the CRA. Is it reasonable that for 5 minutes a day when people are waiting in your front foyer that they would consider that part of your business space? So something to discuss with your business advisor, but often the amount of time does not justify, it being utilized as a business. David, do you have anything to add to that?
That was excellent, Leanne. I was thinking similarly. The one thing I might add is that CRA makes available some interpretations, some decisions on certain client situations, and that material is available. And often your trusted business advisor will be able to research your specific scenario and see if it matches something CRA has already provided an opinion on to provide you with greater clarity.
Okay, perfect. And the last question here is, Leanne, you had mentioned that there's apps to track kilometers. Is there an app that you can recommend?
Yes, I can. The one that I have utilized myself personally and recommended to a number of our clients is called Mile IQ. You can download it in your app store for, Apple or Android. And it works very simply. Once you have things set up, it tracks each trip as you're driving, and you simply can go in daily or weekly. I typically recommend a minimum of weekly because this way things don't build up on you, but you classify the drives as either personal or business. And at the end of a period, whether that be monthly, quarterly, or annually, you can pull those reports to see exactly how many of your kilometers were tracked for business and how much for personal. And as long as you have that starting odometer reading for your vehicle, you'll be able to very quickly determine the percentage of business use for your vehicle.
Great. Okay, so that wraps up the questions, and I'll put it back over to you guys.
Okay, thank you very much, Sandra, for helping us with the questions today for our webinar. So we hope that all of you who have joined us today have benefited from this deeper dive into how a corporation not only saves you taxes initially, but how you can skillfully and strategically take money out of the corporation personally to minimize your overall taxes. And as you can see, there's a lot of factors to think about to customize, to individualize your tax saving strategy. And we've introduced you to some. The key is, what is your specific situation and what does the Income Tax Act allow? And so we'd be happy to share with you more details and further discuss your options with you. So following this webinar, what can you do? What can you do to help grow your business successfully? So there are a few that we've mentioned here on this slide. If you haven't already done so, another reminder to please download our ebook. You'll find it filled with practical tips, and we try to lay out a pathway on how you can take 5 steps quickly to jumpstart the growth in your business. Secondly, you can join our Facebook group, where you can, along with other like-minded business owners, ask questions, share ideas, and find out what is working for other business owners. And we will also share our thoughts as well in the Facebook group. A third, you can book a free discovery call. You can let us know what's a key challenge, what is something that you're wrestling with right now to move your business forward. We would be happy to chat with you. A free discovery call will be in a link in the follow-up email that you're going to receive, and you can pick a day and time that works for you. And then please don't miss out on our next webinar. We are going to take a deep dive now on what it really looks like to work with a trusted business advisor on a monthly basis. What does the meeting look like? What tools does the business advisor use? What coaching objectives will that trusted business advisor have working with you as a business owner? So we're going to give you a glimpse as to what that looks like, so that you can see yourself in that setting and see that it really will benefit you as you grow your business successfully. So that's what's happening in May. And we're hoping to continue this series throughout 2021. Yes, Leanne.
On that note, there was actually a late question popped into the question and answer that was really along that line. So I'm going to let Sandra bring that to our attention now.
Okay, very good.
So the question is, there's several trusted business advisors that are helping me. So with insurance, accounting, bookkeeping, lawyers, that kind of thing. She's basically wanting to know, or they're wanting to know, do they come does there come a time when people actually, those advisors talk to each other, or will they always be expected to bridge the gap between them?
So in one of our previous webinars, which you can find on our website, www.pankowich.com, Leanne and I talk about these other typical business advisors that a business owner will have. And what we feel is the ideal setup is to select one of those business advisors to be your financial quarterback, to be the single source of contact, your main source of contact in understanding your complete business situation. In our experience, thinking of these other business advisors, we suggest that an accounting professional, such as a chartered professional accountant, is ideally situated to be that financial quarterback and to form that network, that team, and collaborate with the other team members, these other specialists, such as insurance advisors, lawyers, bankers, etc. But bring them all together so that there are no gaps, so the business owner doesn't have to go from advisor to advisor, sharing and repeating the same information over and over again, and avoid duplications and avoid gaps. that single source of a trusted business advisor then provides an excellent solution, we feel, for a business owner. And we think that it's an accounting professional that is ideally suited to bring that team together for the benefit of the business owner.
Yes, and I think the big part of that question is you shouldn't be the bridge, because having those professionals working for you and having them communicating with each other makes sense from the standpoint of this is not your, in a lot of cases, because your industry would be outside of those industries, this is not your native language, so to say. And this way, there's nothing getting lost in translation. So if you can find those professionals who can navigate and work together, which is one of the main reasons why David and our firm have formed that strategic partnership, is so that all of our clients get the benefit of full communication between and on each of our clients and what needs to be done from each side.
Absolutely.
Thank you.
Okay, so that's been great. We've really enjoyed having all of you on our webinar today. We've hoped you've taken away some practical tips, some factors to think about. You'll be able to make more informed decisions when you're thinking of customizing a tax saving strategy for you and your family. We hope you have a corporation so that you can benefit from these advantages that we've shared today. And we look forward to seeing you in the near future on our webinar in May, on a discovery call, joining our Facebook group, downloading your ebook. We invite you to take action. There's many ways that we can work with you, Leanne's team and ours, to support your business growth. And so we wish you every success in your business journey until we talk again. So bye for now, everyone, and have a great day and weekend.